Okay, so good morning, everyone. Welcome to today's macro snapshot. Probably be quite a quick one because not a huge amount going on. Although there are a couple of interesting things. So it is, just for the record, Tuesday, November the 21st, 2023. I mean, first of all, let's just look at sort of where the equities are, because obviously there's been a lot of, how can we say, movement recently in OpenAI, obviously in Microsoft. We all know the drama going on there. And so yesterday we had a pretty strong sort of session with companies like sort of Microsoft. And just broadly, if you look at the NASDAQ here, we see the NASDAQ really at a pretty sort of critical point here. Just in terms from a technical perspective, and we can see here they're just butting up towards, let's call it, about 16,000 on the futures here. And so the question now is whether this can, retest up here about the 16,700 mark or not. And possibly the catalyst for that will come probably from two things: is kind of the broader sort of macro situation with the yields. And we saw that yesterday, the long-term, we had the 20-year auction, which was quite successful, although it was, as I explained in yesterday's video, a little bit idiosyncratic is that product. So we can't maybe take away too much from that. But nonetheless, that supply was absorbed with no problems, and the yields came down a little bit. So if we just, actually, just while we're there, let's have a quick look and just look at some of the yields. So we look at, let's say, the ZB. And you can see here that the ZB, which is the 30-year bond contract, just continues to grind upwards. Nothing dramatic, but definitely sort of enjoying that yesterday. So the thing is here that the yields, if we have a look here at the yields, let's say the 10-year yield, you can see on the 10-year yield in the US, that's getting towards the bottom of the range here, about 440 basis points. Pretty similar thing here with the 30-year, that's grinding down as well. So at this point, we have a situation where, earnings have been reasonably good. We have the yields coming down, and we don't have any particular, sort of economic data which could upset anything at all. So at this point, maybe what's going to get the market's attention in terms of NASDAQ could be something like NVIDIA, which is reporting today, as we all know, after the bell. If we look here on the daily chart, we can see that NVIDIA, like, most of the big, the mega cap stocks, the so-called Magnificent Seven, has actually done very, very well. But that too is coming up towards, sort of some kind of highs. And it's had a pretty good run. If we actually look in the last couple of weeks, it's up about 25%. So that's very, very good. And obviously that's intricately sort of intertwined with the artificial intelligence, the AI kind of narrative. So the market is expecting big things today: strong earnings, strong forward guidance. So that really could give the next direction and sort of decide in a certain sense whether the NASDAQ decides to push up much higher and sort of retest, this kind of level up above, or whether maybe it just says, okay, NVIDIA just taking a little bit of a pause. Maybe we'll all take a bit of a pause here, and a little bit of a pullback might, it would be completely sort of natural. So I think, until and unless we get the sort of strength from the NVIDIA, we just maybe today the market will, trend upwards a little bit, just going in towards the NVIDIA, a bit of anticipation and front running there. I mean, the other thing as well is that the VIX is down at very, very low levels. Actually, I saw yesterday there was a huge option play, someone buying long puts on the VIX futures, targeting, I think it was like a 12 handle or 12.5 handle before Christmas or so, a very big play there. So the thing is that we have a VIX which is very, very low. That's going to be sort of a tailwind in a certain sense for the equities, or at least won't be a headwind. So that's that. So in other words, as well, the other thing which could just get the market's juices running a little bit, we do have the FOMC minutes. So for minutes from the Fed, from the meeting from, was it 2 or 3 weeks ago? That's normally released on a Wednesday, but today, because of the Thanksgiving holiday coming up, is on a Tuesday. So it's going to be released this afternoon at 2 p.m. That meeting, if you guys remember, was the meeting at which the Fed more or less said that, it was sort of relatively dovish, and they said that financial conditions had been tightened somewhat by the run-up in long-term yields. And if you remember at the press conference after that with Jerome Powell, he gave a little bit to the bears, a little bit to the bulls, but was broadly saying that he was sort of happy where things are. Now the question is, since then, which, as I say, is 2 or 3 weeks ago, we've had the bond yields coming down. We've had the US dollar, if we have a quick look at the US dollar, which has weakened, quite a lot actually, going into it, about sort of 50% here. So Let's just have a quick look there. We can see, actually, there's the fib there. So we're all already back to the 50% retracement. So we've had the US dollar weakening, we've had the yields coming down, we've had financial conditions loosening, and of course, we've had a pretty significant rally in the equity market. So the thing is that even though the FOMC minutes are supposed to be a relatively accurate record, in broad brushstrokes of what transpired at that meeting, the reality is that if the Fed does want to turn that into a news event, it has the capability just by tweaking some of the language and maybe putting a hawkish tilt. So I think at the moment the market last few days has been quite happy, yields drifting down along with the market, the equity market going up, the dollar coming down. So just who knows, let's keep an eye out for that at 2 p.m. just in case there are some hawkish surprises, and that could be enough. Let's say, for example, if NVIDIA is a little bit lower than expected or weaker than expected, just to pause the rally for a little bit and give us a bit of a pullback. Other things to have a quick look at, we also have Lagarde and from the ECB and Schnabel, Isabel Schnabel today talking. At this point, the market broadly believes that the ECB, like the Fed, is probably on hold and will be cutting at some point. So it's hard to see what could be market moving there. Just the main thing happening in the European markets at this point, we had a little bit of a pushback yesterday by the Belgian central bank head, Pierre Wunsch, I believe his name is, and that got the yields in the German bonds ticking up a little bit higher. But overall, we can see that if we look at in the European bond space, we can see that the spread between the Italian bonds and the German bonds actually is coming down. And has so ever since the last ECB meeting. But having said that, it is getting to an interesting point around about the 170 basis point sort of differential. And we all know that the ECB was relatively dovish. And we know that Meloni over in Italy, the prime minister there, got a bit of a win last Friday when Moody's decided not to downgrade the debt. But the question is, at the end of the day, the situation in Italy, the debt to GDP ratio is still very, very elevated. It's a sort of a low growth situation there, and they are doing a lot of issuance. And there has been some, very subtle chatter coming out of the ECB that maybe the PEPP program, the pandemic emergency purchase program, essentially kind of a QE for Italy and Greek bonds and Spanish and Portuguese bonds, that might need to be scaled back a little bit. So I would say at a certain point, this spread, if you look at it, it got to a maximum about 260 basis points about a year ago or so. So we've come in, quite a lot. I would say that if this goes down another 5 or 10 or 15 basis points, it could be an interesting level to start thinking about, sort of re-entering that based on the idea that, as we go into next year, there could be some sort of quantitative tightening or stealth quantitative tightening by the ECB. At the end of the day, the structural situation of Italy, despite the recent good news, is still not great compared to Germany. And so I just wonder whether this sort of bond spread here is starting to get to a level where it warrants some kind of attention. Put it on the screens. That's all I'm trying to say. Other things to be talking about here. We see, just I'm going to look at the euro, and as I said, the US dollar, the dollar index down significantly to a 50% retracement at this point. Let's see what happens with the minutes, because that has come down a long way. I mean, I've got to say, it would not surprise me if we can test a little bit further. Let's say down to the 103 mark, or maybe even test back down here, like a full kind of, extended fib retracement all the way back down here. Because at the moment, we're just in that sort of sweet spot where the US seems to be slightly softening a little bit, and the rest of the global economies are just, taking a little bit of a pause and sort of doing slightly better. So this is just one of the rare moments where the US dollar maybe will sort of soften a little bit. And we're seeing that, against all other currencies, it's not doing particularly well. We'll see the euro also up to an interesting level here. And again, maybe, I mean, who knows, maybe some comments from, we've got PMIs next week coming out from the Eurozone. Dovishness from the ECB, from Lagarde or Schnabel today, but certainly getting to an interesting level here. It's difficult to say you want to short it just now because it's a pretty bullish chart at this point. Although if we throw a Fibonacci on it, we can see, of course, that we are getting to pretty interesting levels, almost back to the 61.8% retracement. What is interesting is that the yen also has found a few friends, and basically at that 152 level there, pretty strong rejection, which also, of course, beautifully coincided with the CPI. So that's come down about 300 or 400 ticks. not really any structural difference or change within Japan itself. I think that's more of a US dollar taking a pause kind of situation. But certainly it looks as though the USD JPY, who knows, maybe could sort of extend down here to 145. It's a bit late to buy that now. You'd maybe need to wait for a pullback. What is interesting is that, for example, CAD, we have the CAD CPI. CAD not doing particularly well compared to, let's say, the Aussie and New Zealand. You see here CAD, pretty much tied to the weakness in the New Zealand, in the US dollar. And let's say, for example, you compare it to New Zealand dollar, which is bursting out, and you can see the Aussie dollar, which is bursting above this recent kind of sort of range, doing much well. So in terms of the commodity blocks, the CAD underperforming, and basically based on this idea that the Canadian economy is maybe sort of primed to slow down, a little bit faster than sort of the Asia Pacific commodity currencies there. So we can keep an eye. We have the Canadian CPI at 8:30 today. I don't think it's going to change the dial enormously, but it's something to keep a lookout for. And finally, guys, just want to have a look at oil. Oil, put it on the January contract. Oil has done quite well, as I was saying yesterday. If we throw this onto a 4-hour contract, just in terms of the hurdles, the technical hurdles, we know we have the OPEC Plus meeting coming up this Sunday, I believe. Most probably they will extend the 1 million barrel cut. So really the question there is going to be whether the Saudis can get some other friends on board from the rest of OPEC and OPEC Plus for those other sort of members also to cut a little bit more strongly. But as you guys can see, starting to stall out a little bit at this sort of downtrend of the channel here, this downward channel here, finding it a little bit difficult, just stalling over the last sort of 8 or 12 trading hours here. So it did get above this very short-term fib, 61.8% retracement, but failing to get above that decisively. This is not yet a full pullback. But what I would say is that if there's a bit of a danger here for the bulls, if this cannot, it needs to be supported sort of in this zone. If it gets anywhere down here below, let's say this 50% level at 75.37, you'd have to say that is a bit of a danger side for oil. But let's, as I say, a little bit early for that. Let's keep on monitoring that as we go through the day's session. Okay, I might leave it there. Have a great day, and we'll be talking later, no doubt. Thank you.